This is my financial disclaimer so I don't get sued. Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I'm going to be going over the datasets, the earnings, and the SPY technical analysis for October 28th, 2025. And with that said, let's go ahead and get straight into the data. Now, tonight's video will be pretty short. There isn't a whole ton to go over, and for the actual technical analysis, there isn't a whole ton to go over. It should be pretty straightforward. But with that said, we had the 2-year note auction and the 5-year note auction today. They both came in lower, even though they didn't come in a whole ton lower. We did discuss how the short end of the curve is going to come down slower than the long end of the curve currently. And that's the bull steepening process. Um, and that's to bring the spread between the short end and the long end of the curve to not being so mismatched. Um, with that said, we anticipated the yields being that way. We have the 7-year note auction tomorrow, though. Currently, it's at, or the last auction was at 3.953%. Highly anticipating that coming in closer to 3.75, give or take. Now, I don't know what data is coming out tomorrow in terms of the consumer confidence, the new home sales, stuff like that. We still have the government shutdown, so again, a lot of this data is going to be postponed or, delayed unless it's one of the actual Fed data sets or like an FOMC, something like that. So tomorrow, potentially a really big day if we do get that consumer confidence. I don't think we're going to be getting that though. From what I know, I just know that we will get the 7-year note auction. The rest of the stuff I'm not sure about. With that said though, going into Wednesday, again, Wednesday is the really big day this week unless we get a lot of this PC data on Friday. But Wednesday we have the FOMC, and that's when the interest rate will be decided, which again, they're very, very, very likely doing a 25 basis point cut. And then there will be the FOMC press conference 30 minutes after that, which then Powell will be doing, his speech and going over questions from, the members in the group. So, yeah, we're really kind of not looking forward to tomorrow too much. We're really looking forward to Wednesday and Friday. So, that is the data. Now, there isn't a whole lot to go over with the earnings for tomorrow, as tomorrow we really don't have anything major that I know of. We do have SoFi in the morning, we do have PayPal in the morning, UNH, which most people aren't excited about, but I watch that because I have shares in it. After the close, we have ENPH, nothing really big. It's mainly we're waiting for Wednesday after hour and Thursday after hour because that's when all the massive tech giants are having their earnings. So, yeah, tomorrow, not really an exciting day. Mainly going to be that Wednesday after hours and Thursday after hours. If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime. And getting into the technical analysis, as always, let's go ahead and quickly go over our Bollingers and moving averages. Now, today we did close above the upper Bollinger, which means one thing and one thing only, that the upper Bollinger mechanic has triggered. This means that, very, very, very simply put, we had the close above the upper Bollinger today. Tomorrow, we should be seeing a higher high from this level. And from that higher high, we should start seeing a slow consolidation down to the 5-month as the 5-month pulls up to where the market's trading at. Currently, the 5-month is at 674.67. I believe I have it written down for 676.80. It'll be around that range on the open as we did close at 685.24. Hit that 685 range I talked about on Sunday very, very well. Uh, Moving from this tomorrow, seeing how the upper Bollinger will pull upward, we should see that 8 or that 688 range. 678 range. I can't get these numbers right. 687 to 688, give or take, for that high before we start seeing that real consolidation downward. It could go higher, may not go that high. Just be aware of that. Sometimes those moves will last the entire day. Sometimes those moves will see just barely a little bit of it in the morning, and then it comes pulling down quickly after. So, um, how I do the upper Bollinger moves is on day 2, when I'm looking to take my puts, that's when I start looking at the lower time frames, looking for the bearish structure to start forming. So I'm looking for a head and shoulders, inverse cup and handle, something like that. Now, the 5 mile again will be around that 670, 680 range. It might be higher. I don't expect it to be really lower, but it could be a little higher. So if we start seeing that downward consolidation, that's kind of your target. Would be the upper bounds of that range. So basically the 678, 679. Now, I really don't expect the market to push upward and then pull all the way down to the 5 mile within a single day. Generally, it's a process of about 4 days from going all the way to the upper Bollinger, closing above that, having the day 2 higher high, and then day 2, day 3, day 4, you start having that consolidation into the 5 mile. With that said, this is a bullish move, obviously. We will see the 10 mile pulling upward. We will see the 20 mile pulling upward. We will see our moving averages expanding. So both the upper Bollinger moving upward and the lower Bollinger moving downward. And it does that to show that there's more volatility within the price, that it's breaking from a consolidation range. Now, we have somewhat broken from a consolidation range. And I'm going to turn off the Bollingers and stuff for a moment to just pull up the drawings. Now, this is from yesterday's video, and basically we were looking for the move upward to that upper Bollinger or back down to the 5 mile. Well, we got the move up to the upper Bollinger. From this range, we now have a very strong support area, which is right here, and that's that upper consolidation channel. Okay, that's the 673.77. Currently, the 5 mile is actually above that. If I turn on the moving averages for a moment, you can see it very slightly here, but the 5 mile is actually above this level. That means the short-term support is trying to build, an actual level to move off of at this 673, 674 range. So overall, that is bullish. But again, tomorrow kind of is the day to short into this, because from the upper Bollinger, it's always a move into the 5 mile, and sometimes you can go all the way from the upper Bollinger to the lower Bollinger. Seen that happen multiple times. It doesn't always happen, but generally I try to think of the upper Bollinger and lower Bollinger as like the sides of a road. And let's just turn off the drawings for a moment. But just kind of imagine you're like, a car or truck driving on a road, and you're looking at this from the top down. So, the car is driving on the road. There's the left side of the road, the right side of the road, and the edges of the road are really where the Bollingers are at. If we pull off the road, we're not gonna crash, but that does mean that we're off the road. And what the market will aim to do is pull back onto the road. And that works whether you're on the lower Bollinger or the upper Bollinger. When you start pulling off the road, the market will say, nope, time to go back into the middle of the road again. And then, okay, I'm pulling off the road again. Nope, time to go back. So that's kind of how I think about the daily time frames. and how I think about the Bollingers. So while this is very, very, very bullish, we are now off the road, and that means that it's time to come back onto the road. So that's how I kind of created my upper Bollinger mechanic and the lower Bollinger mechanic, and that's how I've been able to find a ton of success in them. But going over the 4-hour chart, and feel free to follow along on the hourly. It just looks better on my 4-hour chart. Now, we did talk about this structure very, very, very in depth. This breakout to the upside should not have been a mystery to anybody. We talked about this cup, we talked about this very strong handle, and we talked about that we were very likely going to see that break upward. Okay, got that perfectly nailed. Now, from this upward break, and let's be very clear, this is a this is a basing move. The whole point of a basing move is to start creating a new consolidation range. So while this basing move currently, I'm expecting it to go to about there, um, it will start pulling downward, okay, to build a consolidation channel from here. And the reason for that is it's setting a level to consolidate at so that it can continue pushing upward. Okay, we're still within a massive buying channel. This orange channel has been buying since 2017, if I remember correctly, within the structure and everything. So super, super, super important channel. Um, with that said, we should anticipate that move upward. Currently, there's no structure here. And I don't really mean by no structure. It's structure that's not very easily seen in the current moment. Um, because it just looks like just some random push. Okay, but it really isn't. It's a break from this consolidation range. Okay. Now, what happens from this, again, I've hammered this point in, you're going to pull down, going to start forming a new consolidation range. Now, generally, the basing move will try to form a top of the consolidation range, but that doesn't always occur. This consolidation channel is a very good example of that. It wasn't like we had the massive push all the way to the top and then came down. We pushed about halfway, came down, and then we had the push up to the top of the channel that really formed the top of the channel. Now, when I say there's no structure here, there's just no formation yet. Okay, very likely we're going to have something like this. Downward, retest the 5 mile. From the 5 mile, head back up to the upper Bollinger. Then probably head back down, test the 20 mile. And from there, back to the upper Bollinger, something like that. Okay, if this is going to, obviously stay in a bullish channel and continue buying upward into the winter. Now, again, we are shorting into this. Um, as of tomorrow, we are looking for a higher high. Now, this looks a little difficult because there's not a lot of structure formed here, but we're starting to look for structure to form. Is this possibly a left shoulder on a larger Head and Shoulders? Potentially. That could definitely play out over the next 2 to 3 sessions, especially since we have FOMC on Wednesday and plenty of very, very, very key earnings and everything. So we're looking for bearish structure. We're starting to look for major uh not support but resistance areas. So this would not be a major resistance area yet. We'd look for something up where there's actual buying and selling up in that range. So we want to see some actual push up and push down. Okay, that's what you're really looking for to start that short to say, okay, maybe this is starting to form an inverse cup. Okay, maybe this is starting to form that, inverse or that Head and Shoulders to take the short. And again, the short is not some crazy, crazy absurd market short. It's literally just to support test. So you take it from the upper Bollinger to the 5 mile. Currently, the 5 mile again is at that 674. Very likely tomorrow will be around that 677 range. That means that this short is probably going to take you from the 687, 688, all the way down to the 679, 681-ish range. So it's not the largest short in the world, but it's a very, very steady and consistent short. And it is the way to short the top. Um, we have shorted the top multiple times in multiple different rallies, and this has always been the way to catch it. Sometimes it's just a little difficult. Like, for example, I know that multiple months this year, this tripped us up really bad when we did not have major support tests. We just had these very, very, very small touches of the 20 mile. And so it's really hard to set up positions buying to that upside. And I know a lot of people got mad at me for that, but it is what it is. And I'm still recovering from that. Trust me, like you're not the only one. Um, with that said, and with the positive mindset of always moving forward, we have to always move forward. Did we have a major support test within this range? Absolutely. Okay. That was the only thing I was looking for from a bearish stance. Even though I have plenty of thesis and everything about what could bring down the AI bubble and whatnot, the whole point of shorting this rally was to get a support test. Now we finally have a support test. We have the bounce off the bottom of this buying channel. Now we just need to continue looking up. And during that upside, we will continue to monitor the risk. And, the risk will be things like watching the VIX or watching the HIG. Today, the HIG had a very nice buying day, even though the actual flow shows a lot of selling volume. The actual price range on the HIG moved up today. So that to me is a bullish thing. Am I still shorting the HIG? Absolutely. Am I losing money doing this? Absolutely. Am I going to continue shorting the HIG? Absolutely. This is how I'm going to be shorting the overall equity market and how I will catch the tech bubble bursting. Okay, so even if I have to lose a little bit of money shorting into HIG, taking dated puts, potentially having to go up a level or two, I will do that. And there will be zero hesitation to that. Um this position is a hedge to my portfolio. This position is a hedge to TLT. On TLT, again, we have a ton of upside right above us. Today we had a little bit of a red day, but we did see the buying, and currently even in the overnight, it's all the way back up to 92. So for the bond vigilantes, in your face, for a day at least, but we got my 92 back. Now we need to start pushing above this and work on our 95. So I'm looking for that gap to close. Very likely it's going to be closed by the morning. That 19 or that 92-19 gap in TLT. So yeah, bullish on this. What about Bitcoin? I know Bitcoin's been up and down. Bitcoin looking super good. Okay, so far it's following exactly into this first bullish structure. And if you saw the video yesterday, um, pretty sure I went over this, but market should be trying to reclaim a lot of this lost ground. Okay, it's kind of time in the cycle. The moving averages and everything are really saying that Bitcoin wants to move. Okay. Now, gold and silver, I know they got absolutely pummeled today. However, I am still loading the boat. I took more calls today. Same strike. I will start adding lower strikes if we don't see this pickup by Wednesday or early Friday. Okay, so just be aware of that. Um, we are below the 20 ma on gold and silver. Not by a whole lot, but we are there. Let's just quickly look at it on the chart. I mean, it does look like we will pull down to that lower Bollinger. I don't really anticipate it. I do anticipate a lot of this to start being bought up. Currently in the overnight, silver is up a whole 30 cents. Gold is up, let's see, up on my chart. See. Nope, that's GDRX. That's not the right one. Yield, that's the one I want. So on gold chart, we talked about how it was either going to break upward in this consolidation range or pull downward. And we said that if it pulls downward, it's going to be within this consolidation range. And when it's within that consolidation range, that means very, very, very likely it's going to try to aim towards the bottom of it. Now, that is something to be concerned about. We are starting to see a little bit of buying in the overnight. And again, I do really expect gold to, or precious metals in general, to just buy the dip up pretty soon here. This can turn into an inverse head and shoulders on the daily time frame very, very, very quickly. So just be aware of that. If anyone wants to yell at me about buying silver and gold right now, like, just don't bother, okay? Last time I told someone to buy gold, which was, you know, I want to say it was back, it was really cheap. It was late 2024. It was back in this range. You know, the Guild ETF has gone up $150 since that range. Okay. Um, most of my picks that I've been doing have been absolutely soaring in the long run. Here is another one. Where is FLNC? I'm super excited about this. I actually have a little over 1,000 shares in FLNC, and I didn't know it was it was going this crazy. So I'm actually really excited. But we have a lot of shares, and by we, many in the group. Many have shares between the $6 to $8 range. I was originally starting to buy around this time frame. So early 2025. It sunk down really low. I did not sell. It started pulling back upward, I guess, built some more support in this 9 to, or it looks like 7 to $10 range and just fully broke out. Now it's all the way back up to 19. Currently starting to work towards that gap of the 24. So just another example of that. One of the more famous examples is Tesla. I told people to massively, massively, massively buy the dip on Tesla back when it was 165. And that was right in this range. People got super upset at me when we legged down from that range. This is right when I told people to buy. We had that leg down, and I said, absolutely still keep buying, because there was a lot of bears saying that this was going to go to 99. Um, you know, not a chance. Uh, from that buy, you hit all-time highs. Few members in the group actually did take this trade all the way to the top, so super awesome. Our TLT, same thing. We had this super long consolidation range. And I've been telling people since late 2024, basically, to be buying into TLT. Now, we rode this rally all the way to the top, and we sold like almost to the penny at the top here when this rally was going on, because we knew that when interest rates get cut for the first time, that the yields like to go higher. And we saw that process occur all the way through here. I originally sold my call positions up there, and I rode my puts all the way down to the 92 and down to the 92 range. in there. Doesn't look high, but I basically wrote it from 99 to 92, and it was a really nice short. It worked out really well, and this pulled down all the way to the 81. Now, I remember when this started pulling up, I did not re-enter the calls yet. I entered puts back at that range. It's not a circle. My mouse decided to move to the side when I was drawing a circle. That's a circle. So I started taking puts back in that range, back at the 86 range, and I rode those all the way down to the 82. It pulled slightly below that, but that's when I took my profit, was at the 82. And from that 82 range, I've literally just been buying this whole time. I've been telling people to load up, been telling people that this is a very large inverse head and shoulders. I've been showing the cup and handle. I've been saying that this is going to break out for a very long time now. And finally got the breakout on that. And now we just need to see the completion of it. So I'm not saying that I'm a guru or anything, but I am saying that a lot of the stuff that I see may not happen instantly, but it does occur, for the most part. So when I'm saying I'm seeing a gap fill up to this all-time high, I really do see it. I see the technicals behind it. I see the massive, massive, massive buying opportunity. Just being under this 20 mile range is a huge buying opportunity. So yeah, that's why when I take some more of these questionable type trades, that's the thesis behind it. Um, So yeah, I'm going to end the video there. I hope everyone has a great night, great day, great safe tomorrow, and remember tomorrow, very, very, very likely, we're going to push to that 687, 688 range. It should be a very clean push, and from there, short it down to the 5 mile. So yeah, with that said, have a great day, trade safe, and I will talk to you in tomorrow's video. And in tomorrow's video, we'll go more over the rate decision and everything. So yeah, have a great day, everybody. Take care.